Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the IWM, which is the ETF for the Russell 2000. We're going to look at some Elliott wave counts and then we're going to look at some basic technical analysis. But before we begin, I'm going to do that very rare thing that Tom very rarely does here, which is talk about fundamentals for a moment. Now, I've already explained the technical reasons in my recent SPY and NDX videos why it is I support the idea of us having recently put in a primary wave 3 or close to putting in a primary wave 3, going to a major top during the summer and a correction into a primary wave 4, seeing a significant pullback. I've been suggesting a top in the summer for a long time. It's just that I suspect that it's not primary wave 5, the completion of the market. I simply suspect that it's primary wave 3 due to proportionality and wavelengths that we've discussed at a technical level. But let's just discuss a fundamental reason for this at the moment. Any of you who follow my channel know that I've been struggling with the count on the TLT. Now, I recently did a video for my Patreon members on the DXY and the dollar and the various scenarios we could see play out from an Elliott wave perspective there. But the dollar's rallying, right? And it seems to be firming up. Now, it may be a temporary bounce before it heads lower. I suspect that could be the case, and I suspect there's a reason as to why. But we've been seeing yields weaken while the dollar strengthens. So the dollar's not a rate-driven instrument in this scenario. Rates are declining regardless of the fact that the dollar's strengthening. So this tells us that the bond market is not buying the recovery. Not really, not fully. Well, that's one way of interpreting it. So what do I mean by that? One of the fundamental reasons to back the idea of why I believe the market is topping out at a primary wave 3 during the summer, significant pullback in the fall before going to new all-time high, is because I don't think the Fed is done. And I don't think fiscal stimulus is done. I think if we get a surprise to the downside regarding growth and lowering inflation, I know the big topic at the moment is increasing inflation, but year-over-year figures are suspect, to say the least. You have to remember the level of economic activity this time last year, March, April, May, June, July, during the lockdown months, was basically zero. So any growth a year on, year-over-year figure in this March, April, May, June, July is going to seem extremely inflationary. And yet it's not. Not relatively to base. Not to where we were prior to the pandemic. So, as the months roll by, those inflationary figures are likely not to keep increasing. Now, I know there's a big inflationary argument out there because of the fiscal stimulus, and I know a lot of people have brought it hook, line and sinker, and I know there's a lot of valid arguments for it. I'm not picking sides or telling people they're right or they're wrong. I'm just saying, let's stop and consider for a moment why it is the bond market is not reflecting the inflation interpretation, the inflation expectations at the moment. And I think it's because when the later months of the year roll round, when we were coming out of lockdown last year and the spending has started up again, we won't see a continued increase in the rate of inflation. We may even see it start to decrease and decline, and we may even see negative growth before the end of the year. If that's the case, the equities markets are on the chopping block. Alright, gold and silver too are on the chopping block. And crypto will remain here as well. So everyone's getting their head chopped off essentially in this scenario if this turns out to be correct. Now this will explain why we would get such a significant wave 4 in the broader markets, right? A loss of confidence, the growth story is dead, the recovery story is dead, everything starts to sell off. Inflation is no longer a reason to buy equities under these circumstances. So if that turns out to be true and everything sells off, then what's coming? If that's a wave 3 and we're going into a wave 4 and we get a deep wave 4 and a substantial sell-off, what's coming? Fiscal stimulus is coming. QE 57, QE 58, QE 9,462. And it's not going to stop. And when we get the next fiscal package, and it's bigger than all the ones we've done before, we've already seen the inflationary impact it's had in terms of expectations. If you get the signal that we are all in on the inflation trade, we will print $1 quadrillion if we have to, then you're going to get your wave 5 to new highs. And that's what I would argue is the fundamental reasoning of what's going on. Now, I could be completely wrong, and I don't have much confidence in it myself. There's so much uncertainty about it at the moment, but I just wanted to touch on those fundamentals first as an explanation. So, having said that, let's not waste any more of your time and let's dig into the count. So the first thing we want to look at here is the count we've been following from the bullish side, the bullish interpretation, which is after completing a primary wave 3 up here before the rest of the markets peaked at primary 3, the Russell got up here first and has been going sideways ever since March. Now the idea was that we put in an A, B, C, D, E, rather funky completion to this triangle, then an impulse wave up into a 1, then an A, B, C correction into a 2. Now this is still valid by a tick or two, less than 0.5%. I don't have much confidence in this holding. I think we can probably count this as invalid, but we can't technically call it so until the price comes back below the level of the E here in the triangle. Okay, so this is still valid, but only by a whisker. Actually, we won't use the text box, we'll just use a price label. So, just valid by a whisker. 214.04, sorry. Come back below that, this is invalid. So this would invalidate the bullish count as it is here. So the next thing we need to look at is the bearish count. Now we've been coming back and looking at this every time we've looked at the Russell for months, and the reason we haven't gotten rid of it is it has never been invalidated. We made the high in March, we put down 5 waves into a 1, we've retraced A, B, C 5 waves here into a 2, and now we're just building a series of impulse waves before we break down. Okay, so 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, so on and so forth. So although we might see a bounce here because we got 1, 2, 3, 4, 5 down into a 1, it looks like, which means we'd likely rebound into another 2 at minor degree, then accelerate down. For as long as the all-time high holds, this count is still valid and it's still hanging on and it's still refusing to die. So it is possible the market has peaked. Now this calls for a cyclical peak in a wave 5. So this means that the small caps have topped, as in they're not coming back. You know. Now we can reinterpret this because all we need to do is shift the primary degree or the cycle degree over. So this becomes primary degree up here. This now becomes wave 3 up here. The wave 4 moves across in anticipation of a broader correction, and then all of this changes into intermediate degree here. This downgrades into minor degree. This downgrades into minute degree. This downgrades into minuet degree, so on and so forth. And we shift the whole count across to put the 5 up here. This brings it in line with the SPY, brings it in line with our expectations for the NDX. But we're not going to do that. We're going to keep a genuine alternative to all of those and suggest the possibility that the Russell is a leading indicator and that the small caps, or what we call the real economy, or have often referred to as the real economy, I'd argue that argument's no longer valid since the memers came along. The the meme stocks came along with AMC and GME and the insanity which ensued. Then I would argue this is no longer a reflection of the real economy. This is a reflection of rampant speculation. So just as much of an argument as to why it would peak sooner. So I'm not saying this is it, but we're going to keep this count as an alternative because everything else we're talking about in the SPY and the NDX is pointing to a top in the primary wave 3. So we can at least keep this as a way of keeping our powder dry and having something to keep us grounded in case the broader market fucking implodes, which is a possibility, isn't it? I mean, we're tracking it at the moment, but if it just completely starts to fall apart, we've got an argument in place that the whole thing already peaked. So it's just as a backup. So if this is true, then I would argue that you've got 1, 2, 3, 4. It looks like 5-wave structure here. 1, 2, 3, 4. It looks like 5-wave structure here. 1, 2, 3, 4. Possible 5-wave structure here if you come into the smaller time frame. So this could be a completed impulse into a 1. If that's the case, we will retrace into a 2 in a 3-wave pattern anywhere between 50 and 99.9% of this move in order to be valid. We will retrace this move find our 2, perhaps around the golden ratio, perhaps around the 50, and then we will accelerate down in the 3. If that happens, we will have to keep a close eye on the SPY and the Nasdaq to see what kind of price action we get off of the high. How violently it breaks down, how quickly, what the wavelengths look like, what it looks like in relation to the other indices, all that up for grabs. So for as long as the all-time high holds here, this bearish interpretation is still valid. I've been saying it for months. For as long as this holds, this could be true, and the same is still true today. This is a stronger argument than it was just a week ago, and it's stronger than it was a week before that, because price action has weakened and we haven't made a new high, so we have to bear that in mind. So let's now look at a couple of alternatives. We've looked at the 2 counts we've been following for months. Okay, this idea, which is very close to being proven wrong and invalidated. This idea, which we have suspected is wrong for months, but is getting closer to being proven right. And that's just sometimes the way it goes. This is what happens when you end up in what I frankly call sideways shit, because we're not done anything for months. So you end up tied up in knots if you're not careful while you consolidate. So you have to set some basic levels. The all-time high is one of them. So let's come over and have a look at a couple of alternatives. The first one I want to look at is really simple, which is, what if the triangle idea was correct? Okay, but it's on a much longer time frame. So we've gone, because if we look at these lows, this one here, then you got this one, then you got this one. They're all kind of forming an upward trend of higher lows. Low, higher low, higher low, higher low. Okay. So we've got these highs, high, lower high, lower high. These are all forming lower highs. So there's still a strong argument that this is a triangle, it's just not complete. So with me trying to force, and I'd argue that I was possibly trying to force a bit of an early completion on the, let's have a look, on the other count here with the A, B, C, D, E, that I was probably trying to force a bit of an early conclusion because I saw this impulse wave up and thought, well, this looks like 5 waves, rather than thinking of it as possible another 3-wave structure. You know, it's not ideal, none of this is, unfortunately, in terms of how it's being constructed. But we have a series of rising lows and a series of lowering highs, so that's a symmetrical triangle in essence. Anyway, so we've got our move down into an A, we've got a longer move up into a B, we've got this swing now down into a C, we should get another swing up into a D, which could be mistaken as a wave 2 if it fails to breach these highs, just as these highs fail to breach the March high. Then we get another move down in an E, which would be another higher low, then we finally break out. Now this would be in step with the rest of the market. 3, 4, 5. Long-term sideways consolidation for the Russell because we started so much sooner than the rest of the market. More drastic or severe sell-off in the SPY and the Nasdaq because we pushed to much higher highs and have to correct much higher pricing. So maybe more volatility, which is a bit odd considering that we're looking at the small caps here. But look how static we've been during all this time. So it's a possibility that the tech index, the NDX, is more likely to see volatility and more brutal sell-off over a shorter period than perhaps even the small caps are. Just theorizing. Nice and simple. If we see this lower rising trend line taken out, we have to suspect that this count might be incorrect. However, we can't be certain of it until the initial low down here is taken out. Once this is gone, the idea of any form of triangle pattern, sorry, we're going to move this across to our A, sorry, I put it in the wrong place. So once we take out our A low, which is our first move down off of a high, then any hope of this being a symmetrical triangle is gone completely. So on that note, we're just going to put a price label over here as well. So 208.10. This idea is defunct below this level. We've broken a series of higher lows, and then the series of lower highs is insignificant because we've lost the structure. So we've lost the structure support for our symmetrical triangle at that point. So move down here below 208.10. This could come quite quickly if this thing breaks down. This invalidates this idea. So bearish idea, as long-winded and as desperate as it has been to hang on is actually still valid, probably more valid in the meantime than this idea. So let's look at one more. So let's strip the chart clean in this whole wave 4 and consider some other possibilities. Alright, so the idea of there being any severe retracement at primary wave 4 degree after consolidating since March is off the cards. Okay, we haven't done it. We haven't built a zigzag here, have we? Yeah, we are not doing. We can see that evidently from the high, we are not going bump, bump, bump like this. We've done a bunch of up and down, up and down, up and down nonsense. So the idea that this is a consolidating pattern, which is going to do all this and then do this, that's just not going to happen. The only way that's going to happen is if this is a impulsive, as we discussed in our bearish gap, impulsive, corrective, impulsive. That's the only way that's going to happen. So that would be 1, 2, could not be A, B, C. The relationship would be all off, and we've spent far too much time and far too much structure going sideways. So to look at it correctively, I think the best we're going to be able to do, other than the triangle, is to just slap a WXY on it. We're going to have to say this is a free wave move, 1 to here, 2, 3 to a W. This here is a free wave move, which is a higher high. This one, bum, bum, bum. This is a free wave move, and now we're getting another kind of free wave move. And we're just going to continue the sideways shit until we put in a 4. Yeah, so let's throw some labels on it. A, B, C. Now this is a diagonal 5, 3, 5 zigzag into an A. This would have to be another zigzag. This, well, what we're saying, 3, 3, 5. This would have to be 5 in the C. So this is an expanding flat into a W. I know, don't say anything. This is a zigzag inside of a zigzag. 1, 2, 3, 4, 5. A, B, C. 1, 2, 3, 4, 5. A, B, C. 1, 2. Can't get a flat in here, so that's a WXY inside of an X wave. Which is this is the problem when you end up doing all this sideways nonsense. You end up producing patterns which are not pleasing to the eye or to any Elliott wave analyst, but we've got to clutch at straws. We're not clutching at straws, we're just trying our best here to interpret this. Now we come back to within 90%. Free wave move, maybe. 3 here, 5 forming, maybe 1, 2, 3, 4, bit more to flush down than a 5, possibly. So maybe this is just a regular flat with a bit of an extended C, or even more extended C. None of it's pretty. Okay, W, X, Y, sideways shit continues into a 4 before we finally push higher. Right, what are we looking for? Now the length of this free is pretty impressive. So let's just come up here and pick out the high. So we've been bouncing around the 23.6, which is a possible retracement for a wave 4. Okay, so we've been bouncing around this thing, and it's proven to be support. You know, bounce here, bounce not too far off of here, perhaps another bounce not too far off it here if we finish a Y into a 4. Possibility. And then 38.2 is the green one. We won't bother labelling anything else in the meantime until we take out this target, then we can look to the 50 if it happens. So any sideways correction in a WXY double combination structure I would expect to see complete within the 38.2 in order to keep this sideways theme that's been going on. We know that the 23.6, which I think I just accidentally deleted a minute ago, I don't know why I did that, because I think I did a dot rather than a line. Okay, there we go. So let's just change this to red so we know that's the 23.6. 23.6 is proven to be support. 38.2 I would expect to see any WXY combination to complete within the 38.2, which is a retracement of the wave 3 to here, in order to keep that sideways theme going. And then from there you're going to get a bounce up into that final wave 5. Okay, so that's one way of looking at it, so we'll save that. Next back up, if we're not doing a WXY sideways, then what's the only other sideways pattern? You know, we got a flat, which doesn't count correctly, and tends to be a downward correction with a slight sideways bias, but can be pretty severe. So really, the only true consolidatory patterns which are truly sideways are either WXY, triple or double or triple combination, or a triangle. So we've got the barrier. I did call this barrier triangle, as in a straight line for the top side or the bottom side of the triangle, top side in this case, but it's not truly. We do have a slight series of lower highs, so it's just a symmetrical triangle. Any breakdown below 208, we can write this off. And then finally, we've got our very short-term triangle, which is about to be invalidated. I've got almost zero confidence in this holding. And then we've got our bearish count. So I know this sounds like, oh, you're just throwing 4 counts and hoping something sticks. No, we've got clear targets, so let's just get those clear before anybody starts talking shit about it. Right, so literally 0.5% here on this count cancels out this one, so that's gone in an instant at 214.04. The next triangle is gone at 208, which is still around the which is the March low, 24th March low in this case. That's gone. Next target we'd expect to see to complete within the 23.6, which we've already done, or within the 38.2. Here 196.36 or 209.16. So it's all within. Where's the March low here? So it's all within 5% of the March low as an extreme. If all this stuff gets taken out and we continue to impulse downwards, then the bearish count takes it. Whatever this turns into, whatever this morphs into, is likely correct. You know, we can worry about exactly what it's doing once it gives us a sign. At the moment, we've got this upward trend intact between this low, this low, this low. If this collapses and takes out all of those previous levels for the bullish count to continue, for the bullish count to exist, we have to consider the possibility that this is just a giant 1, 2. Yeah, it could. Now, in that point, we'd have to probably consider the possibility of this being a flat. We'd have to try and get 3 waves in here, 3 waves in here, big 5 down. I don't think it counts that way. I've counted it as a 1, 2 because I think we've got an impulse here. So what could we be looking at? 1, 2, 3, 4, 5, A. Just theorising now, we ain't seen anything even close to this happen yet. B, C. So you could see, let's just pick out our wave 1. Just in case this was a wave 3, let's just pick out our wave 1 back here. So a break over the long term below our primary wave 1 back here at 160, any move below this would suggest that this 5-wave structure, or the overall 3-wave structure of 535, this was the market top here at 5. This was not a wave 3 because it would have gone beyond the wave 1, so this was a wave 5. But it's also possible that we come down in a 3, a 4 that does not overlap the 1. We don't know how big this is going to be or how long it's going to take. And then we just go beyond with the 5 to put in our A. We have a deep retracement with the B, and then we put in the C before that 1. And even then, you've still managed to do a 3-wave correction like this and still have a legal wave 4 before going higher again. Or the whole thing's imploding and it's just going to go deeper and deeper, and it's actually going to take out the March 2020 lows. If you accelerated down at the extremes in terms of a potential extension in the wave 3 with the 1-2 we've set up, 1.618 in extension, then yes, any C leg would likely come down and take out the March 2020 lows, but that would be months and months, perhaps years away, depending on the rate at which things break down, a year or two. We just don't know. Right, and sorry to waffle so much. I know I've been going on and on and on in this one, but this is a very complicated sideways structure which is keeping us guessing, and we're just trying to set some levels, like the triangle invalidation here, the triangle invalidation here, the expected Fibonacci retracements for a double combination here and here, before we throw our weight behind an actual bearish count. Okay, you can still trade this using the STS, the standard trade setup, which I teach our Patreons. You know, you're going to get a 5-wave setup, you're going to get a 3-wave pull back. You look for a reaction, and then you set your entry point, your stop at the low of the reaction, and then you ride it out. If you get stopped out, we go to new highs. You get stopped out immediately, you make a small loss. If it carries on to play down in the way free, you ride that way free. That's what we're trained to do. That's what we're training ourselves to do. We always want to get that way free entry. If it's coming, this will be an opportunity. So if it's going to happen, you get that 1, you get that 2, then we're in the free of a greater free. So this is going to come down. So that's what you guys on the Patreon, you guys on the Discord, you should be looking for that. Do we get a free wave move up? Look for the anywhere in our entry box to 38 to the 61.8. Okay, and then look for a reaction on the 38 to 61.8 reaction, and then go. In your short, entry here, stop here, and you're good to go. Of course, you know, we talk about flexibility in terms of personal appetite for risk, but that's the trade setup we like to see. So possibility of that forming here in the IWM, and whether you're riding a C or whether you're riding a free, it doesn't matter. You've taken the risk out of the trade. Alright then, that is the Elliott wave portion of the video. So let's now have a look at some more basic technical analysis and wrap this rather long-winded video up. Let's hide our count. Let's bring up our 10 in yellow, 20 in blue, 60 in orange, 250 in green exponential moving averages, and we're going to back out to the weekly time frame to do this. Auto the chart. We're going to bring up our indicators. We have an RSI set to a 10 close with a green 30 level representing oversold and a red 70 level representing overbought. We have a MACD with a 10 for the short term moving average, and in blue, and 20 for the long term moving average in orange. So what can we see here? Well, on the weekly, we got pretty aggressive bearish bar here. An outside bar trading outside the previous week, not to the upside but to the downside. So it's not a true outside bar trading above and below it, but trading outside the previous week's bar, closing near the lows. We're trading in the pre-market at 214 at the moment as I speak to you. So from this perspective, that upward trend that we were talking about does look in jeopardy, doesn't it, with this bearish candle? Does look a bit, we haven't had that wick up like we have here, here, here at all the previous lows. So that would have to happen pretty much ASAP. We'd want to see that wick up if we want to maintain the idea that this is any form of triangle. Okay, above the 60, above the 250, which is both still a long way off. Long way off. We'll bring up the count again now. 34% on the weekly time frame above the 250 exponential weekly moving average, which is tremendous. Same story we've seen in the broader indices. Obviously, we've seen the same huge move away from long-term consolidation. Weakening RSI during this whole sideways move. The market has tried to set higher highs, failed, set considerably lower lows in the RSI, moving down through the neutral zone. But such a long-term consolidation has brought us closer to oversold conditions than we've seen in the Nasdaq or the SPY. So this is the thing about sideways consolidations. As you might know, I've often said, what you don't correct in price, you correct in time. The IWM has been doing everything it can to correct its price with time rather than movement up or down, and we've basically done it. I mean, we've moved almost back to the zero bound in the MACD, sustained bearish move, larger bars in the histogram, short-term moving average over the long-term moving average since March. So we have been in a long period of consolidation, so we don't need a collapse here in order to complete a wave 4. However, if the market topped here and this is weakening momentum and we put in a lower high, then this will result, if the bearish count is correct, in an absolute implosion within the next 2-3 weeks. So we all know when you see it. Like I said, short side setup, you need to be on the you need to be on the lookout for. Daytime frame. Alright, so coiling up the moving averages with the 60 ever since March, the 10 and the 20 I'm referring to here, where we have a consistent gap in the wave 3, the strength of the wave 3 up, where we have consolidation here below the moving averages into a wave 1, 2 at primary degree, then we get that 1, 2 at intermediate degree, forcing our way above, then we sustain the wave 3 as we'd expect, above the 10, above the 20, above the 10, above the 20, above the 60 the whole way, then we start what could be in our bearish count, 3, 4 to the 65, top of the market, sideways consolidation into a 2 before collapse, or into a 3, now through the 20 and the 10 and the 60 to get our sideways 4, perhaps looking for long-term consolidation to arrive with the 250 coming up from a day time frame, but that might stretch the idea of a sideways correction. Daily time frame already in oversold conditions, right? Already in oversold conditions below the green line, so expecting a bounce. If we don't get a violent sell-off immediately, I'd expect a bounce from here. We've potentially got 5 waves, 1, 2, 3, 4, 5. 3 waves up, reaction, short, entry, go. That's what you'd be looking for. If we're wrong and it goes higher, you'll be stopped out ASAP. So red bars in the histogram getting stronger, short-term moving average accelerating away. 10 and 20 crossing over the 60 in what we call a death cross. Not a true death cross. If we see the 60 over 250, we can call that a death cross. But as I often point out, when these moving averages cross over, and we do get these death cross and bull and golden crosses, they often signal temporary market bottoms and temporary market tops. So that could be a bottoming signal here. We've got oversold conditions, could see a bounce. Right then, so I think that sums up our basic technical analysis as well. So I hope your head's not spinning and you're not stuck running around in circles. Go back and have a look at these simple targets that are all within a percentage or two of where we are, which confirm our bullish suspicions or our bearish suspicions, okay? And keep those in mind going forward over the next couple of weeks as we wait for the Russell to give us a signal of completing a primary 4 or having topped. And we should get that within the next week or so, depending on price action. I know we could have said that at any time during all of this, but that's the problem with sideways corrections. They keep you guessing. Alright guys, if you're new to the channel and you like what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Leave us a comment in the comment section below if you want to. And as always, thank you very much to my Patreons. Your support is greatly appreciated. If you're interested in becoming a Patreon, there's a link to my Patreon page in the description box below. There's also a link to my Twitter feed. If you're not following me yet, go over and do so. And I will be back with you guys later in the week. All the best. Bye bye. Take care.